Welcome to TradingLounge and the US indices for Friday, June the 3rd. So just starting on the weekly chart here, and I just really want to have a look at the indicators here. We can see that the stochastics has captured most of the lows here. It's not to say that that would be doing it again, but it does present a pretty good sort of op at this point in time. Don't worry about the wave count too much because on this weekly chart, because it's the old count, even though it's can be correct. We're going to go to the daily chart now. Just wanted to have a look at that. So the S&P, the NASDAQ has pulled down further and overlapped wave 1. So really we need to put 5 waves in all of this move here. And you know, the tech stocks were pumped up and then they were dumped, and that's why they pulled the NASI down quite low. In terms of the low volatility stocks in the SP 500 on the iShares here, we can see that that the market hasn't really pulled down much at all. You know, the Berkshire Hathaways and so on. So it really hasn't pulled down very much at all. In fact, it's just really snaked itself across the what I call the medium level here, 150 in terms of the trading levels, but that's another story. So in this particular pattern here, that's the high here. We've got a beautiful A wave, an A and a B, and then 1, 2, 3, 4, 5 for the C wave for B, and then 1 and 2 and 3 and 4 and 5 finishing down here. We've been, you know, looking at the impulse wave here, because if we get an impulse wave here, then we're going to get a correction and then another impulse wave at that point. So yeah, it's just coming along quite nicely. I won't go to the intraday here, but as you know, we've been tracking it as 1 and 2 and 3 and 4 and going up for 5. So once we make a new high above wave 3 there up here, we're going to have an ABC pattern come back into play here for this, and this is going to create our buying opportunity at this point. In fact, all we need to do at this point is take that out, and we'll turn that green, put all the lights on. There we go. So basically this will be an A wave, a B wave and a C wave, but anyway, we'll be buying down here, but we're just using this as a bit of a template really. The volume looks quite good, a bit hard to see there to read for young players, so we'll just go to the monthly. That should sort of give you a bit of an idea. So we can see that we've got increased volume. For a trend to be a trend, it needs increasing volume, either up or down, and corrections are normally on lower volume, and we can see this bar coming down from the top here was on lower volume, so the sellers are not really in control of the market at that point. So we'd like to see some follow-on volume through that. Of course, June is just beginning. So anyway, that's the low volatility stocks. They've held up well and looking quite good. So I'm just going to go for the S&P, I'm just going to go to the daily chart where I've got a count that's probably more in tune with what we're looking at the moment. So still an ABC pattern here, held up reasonably well. Like I said, the NASI was pulled down. Some of those tech stocks had pulled that index down further. So let's just sort of go over this a little bit. We've got a bullish count and a bearish count, and I think it's just only fair to be sort of balanced in the market, you know, because if you put all the bearish counts on the table and all the bullish counts on the table and then just weed through them as they dissipate one by one, you're going to be left with something, and then you would go in that flow with that direction. So that's essentially what we're doing. So even though I've got the market as being bullish, you know, which we've called in from the low here, we still needed to gather evidence, and that's all we've been doing, and we're still not out of the woods yet either. We still need to continue to build evidence and tick boxes and so on. And that means that like we just looked on the low volatility stocks, we're looking at 1 and 2 in here, and then 3 up here and 4 here, and then going up for wave 5 into this box here roughly. So a 5 wave move up here is an impulse wave. Now that's a good news for the bullish side of things, but it doesn't get us out of the trap, because you know, I've counted this down here as 1, 2, 3, 4, and then 1, 2, 3, 4, 5, and I think that counts quite nicely like that. But you could also count this down differently as well. I know it's been a bit of a struggle for Elliott folks to get their heads around this, so we've seen a lot of WXYs there, and so on. So a lot of folks are looking at this. Well, let's just label it now. So looking at on the bearish. Oh, we've got the bearish side on another chart, so I'll go there for that. I won't label it here, but anyway, on the bullish side here, we've got 1, 2, 3, 4 going up for 5, and then we'll have our A wave, our B wave, and our C wave here. So as I mentioned, we've traded up here, then we've been we're out of the market, flicked out, kicked out, whatever, and then wave 4 here, and then going up for wave 5. Now going up for wave 5 here was really just for very short-term traders and day traders and so on, and we'll obviously focus in on that, but my eye is on this price over here of this third wave here. So we'll be looking at, this is the one that we want to catch, and there'll be 5 waves in this wave. If this plays out, all we need to do to confirm is if this is going to be an A and a B and a C. On a bearish move, it can be wave 1 and 2 and going down for 3, 4, 5 and continue going down, and we'll talk about that too. But if we get a 3-wave move here, that second high here, be it wave 1 here and 2 or an A and a B, all we need to do for a bullish count is take that out, and then we'll be on our way. Now, in taking that out, we probably won't be triggered in at this point, because what will happen is probably we'll see the first wave up as 5 waves up here, taking on that consolidation, head and shoulders, whatever you want to call it, and then we'll buy the pullback here, but we'll also be building in on this side over here as well in a pretty safe way. But money's in the turn, but so is the risk. So yeah, we'll be seeing 3, the third of the third up here. So this is where we want to. It won't be exactly like that, of course, but we'll be looking. We definitely want to be in the beginning of this trend here. So it'll be a version of this here, this 1, 2, 3, 4, 5 here. That fractal, that impulse wave, we will see a larger one over here for that. And the standard for this is that if let's just assume that this continues up here, I'll just take it to this top here, might go up a bit high, a bit lower, doesn't matter, and we take this this length here, so that's really from 0 to 100 here, and then what we do at that point is we can just grab that. I might need to move that line out of the way, just grab that there, and we can put that on the low of wave 2 here, and then it should be that wave 3 should be 100 plus 161, 62%. So that will take us up to here, and that's quite normal for wave 3 to come up into that space. It's also normal for wave 3 to hit on 5,000 here on the major trading level. So anyway, we'll get to all of that, but that's just sort of shooting the breeze there a little bit. And yeah, before we go and have a look at this on the bullish side, let's go and look at the bearish side, which I think is on, did I put it onto this chart or was it on another one? Okay, this one here. So let's just put Humpty Dumpty back together again and clean some mess up here, but pretty much on track here. I'm just going to clean all this up here. Obviously we've talked about it before, but I think it's really important to talk about it all again here for a moment. We've still got plenty of time and we'll be talking our way through it, but it's kind of nice to have a plan before the shit hits the fan, so to speak. So with the bearish move, we need to look at this as wave 1 here and wave A here, and as wave, we'll just work with wave 1 here. As I've mentioned before, this is Elliott Wave International's count, so I need to give them credit for that. So wave 1 here, an A wave here, a B wave here, and a C wave up here for this. So I'm just going to move that across over here. Anyway, it must be the 61.8% retracement level. So in a nutshell, we're looking for a move that will be above wave 3 and in this space here somewhere. So we could put this over here. Could be a wave B as well. Let's put that out the way over there, put that out the way over there. Yeah, anyway. Yeah, so all we need here is we just need this to finish off here. This will also be an impulse wave in here. So that's all good at that point. And So on the bullish move, what we're going to be doing is we'll be looking for the A, the B, and the C wave over here, and we'll be going long over here for that. If that's triggered, that's going to, market needs to prove to us that it is strong, and will be triggered at that point. But we're going to do a better job than that. So that's the bullish side, and we're going to talk about that a little bit more later on. On the bearish side, if we've, let's just say that the market moves up to this level here, and let's just say that you can see three waves here, that A, B, C that I'm talking about. I'll leave that there. So as an A and a B and a C wave here, anything below a three wave swing would be bearish at that point. So we could look to go short. We could look to go short below the C wave here, but below, see how this is in three swings, and we'll be looking at that in a moment. This is three swings, this is three swings, anything below three. So this is a good example. Oh, it's in reverse, but so anyway, three swings here, you can go short because it would be bearish at that point. It's not the best trade in the world, but it's something. But also too, in the bearish move down to this level here, down to the 4,000, we're going to see a bounce here. So it's also likely that the move from the top, wherever that top is, down to the 4 here is going to be an impulse wave. It's going to be 5 waves. So that means it's going to have a counter trend in 3 waves back to the 50-60% level at that point. So this is where we will also be looking to short it at that point. And the reason for shorting it there will be simple, because we will have 5 waves in this move here that will confirm that we're going to get another move down here. So we'll short there. We'll also look to short under the B wave here, because that will be an A and a B and a C wave here. And then we'll also look to build under here as well, and build into a big strong move to the downside. Now, you might say, well, Pete, why don't I just short when we get to this 1, 2, 3, 4, 5 here? And you could certainly do that, and you might get away with it, and you may not, because, you know, if you shorted it into this space here, then we're going to get an ABC pattern. And if you're going to do that, you would need to keep your stop above the first bounce here, because this will also be 5 waves here, and this will be a 3 wave counter trend, and you'll need to keep your stop above that. So we're just going to turn that red at this point, but we're going to talk about this more as it plays out, of course, so we'll be all over it. And that's where the stop can go. And then yeah, and then you can move it down to the second high, but you must realize that you've got to try to get this into profit at this point. So if you shorted it, say at if it got close to 4,300 here, the top of minor group 1, so 4,000 is a medium level, then 1, 2, and 3 is all group 1, and if you shorted it right on that, on the nose there, then you would have a position there, and then the time the second high came in here, you could be in profit at that point. But you might also want to consider, when this first leg comes down here, is taking some off the table there, taking off, you know, 30, 40, 50% at that point, because if you get stopped out over here into a bullish move, as a trader, you don't particularly, if that gets breached there, you really want to be long from that point as well. So you can have a crack at that to the downside, but you need to manage that risk, that exposure. It's okay to lose a little bit of money, you know, it's all part of the game. Get to break evens, the sweet note, you know. Anything above that is, you know, you're either drinking some nice beer or water, depending on what you do at that point. Anyway, we'll talk about that further, but that's the bearish count. The A wave, the B wave, 1, 2, 3, 4, 5 for the C wave for wave 2. And as I mentioned, this is Elliott Wave International's count, and got to give them credit for that. And yeah, if they're right, we're going into, you know, a massive bear market. They've called tops in before, they haven't always got them right. Well, in fact, they've never got them right, but they could be right this time. So you've got to be careful how you praise and criticize everybody, and you need to take your own fame and defamation in the same stride, you know. So anyway, that's sort of where we are. let's just see what plays out at this point. But for us at Trading Lounge here, we're open-minded, and we don't care about being right or wrong. We just care about making money. So that's my situation, and that's what we're going to do, and it's going to be as simple as that. So from this, we're going to go back to the bullish count and have a little bit more of a look at this here. So I think we're on the 2K tick for that, and we'll probably need a bit more data in on that. So yeah, so yesterday we were looking from here, we're looking from the low here of 1 and 2, and then going up for wave 3. We're looking to come back to the 38.2% retracement level for wave 4. And for the short-term traders, you could buy here. For the short-term traders, you'll need to take profit anywhere above the top of wave 3 there. I haven't pulled that apart, and in some cases across the stocks we could also put wave C over here and this wave B over here as well, so you may be able to look at that as one ABC for 2 here, third wave here. I mean, it's normally the third wave that comes and hits the top here, you know, and that's why the fourth wave can be laborious and complicated and all of those sorts of things, you know. How far that goes up, I don't know if it goes to the 4-3. It certainly could, but normally if the extension's in wave 3, then wave 1 and wave 5 will be roughly the same. But like I said, I don't really want to get involved in all of this too much. I think that, you know, this is where we need to be over here for this. So we can see that since last time we spoke yesterday, I think we were somewhere, I can't remember, in here somewhere. So you can see it's going to take a good few sessions to get over here and get geared up over here. So we've got lots more to talk about as time goes on. And what we're looking for here is from this wave B here down to wave C here, there'll be 5 waves in here. And, you know, it'd be like this here, but in reverse. So 1, 2, 3, 4, 5. Now, you might be able to see the 5 waves in here. So there'll be wave 4 here. Sorry, wave 3 to come down. Wave 3 will come down to this low, and then wave 4 will spend time sort of, you know, being complicated. If you can see the market being messy there and you can't work it out what it is, well then you know that it's a wave 4, and then wave 5 will come down. So when wave 5 comes down, that will also be in 5 waves. So if you can count that, well then you can get in on the turn. If you can't get in on the turn, then you have to wait for the first little 5 waves to move to the upside. And it's good if you do that, because it helps you manage your risk a little bit, because if you get 5 waves here, you know that you'll get an ABC pattern over here for that, and then pulling back 50-60%, could pull back 80%, anywhere from 40 to 80 you should expect, and then push up from that point. So you could also go long on the little B wave here. This will also turn into another 5 wave structure over here for this, so just fractals, and then this will pull back again over here for this here again, and that can pull back. It's quite difficult, because if you get in late here, then you might be carrying a loss over here for that. But we can buy back over here for this as well. I'll just copy this one here. So we can buy that at the 50-60% retracement level. So building in over here, we've got plenty of time when you think about all of this, you know, because if you go back to, and you might want to think of using ETFs in this, so it's a bit cheaper to run on that. Where are we here? If we just go back to the 200 here in the daily, just to get a bit of a, you know, I mean, we're really splitting hairs down here, you know, but we're talking a move that's going to take us, well, it's going to go to about 5,300, 5,200, but we're just going to go to here. This is where we're aiming at. So, yeah, I mean, we'll break it down. So when you're thinking about it, here, normally what I would be doing is building in around group 1 here, so 4,000, 1, 2, and 3. So the Fibonacci sequence between 4 and 5, 1, 2, 3, 5, and 8. And of course we've got group 2 in here as well, so we'll pull all that together. But we want to be building, we want 4 or 5 positions in here. We also want to be adding on top once this becomes support over here with a classic trading levels pattern sitting here, which will look like this here. That's the 4,500. Once we get that here, we'll be going over here. You could take money off the table here and get back in over here, depending on what product you're using to do the journey on. But yeah, so we want about 4 or 5 trades in here if you've got an ETF, and then also over here as well. We can take some profit, because 8 is always a profit taking number. 1 is the strongest number in the market, then 5, and then 8, then 3. So there will be profit taking here, and of course the old high over here will just solidify that. But yeah, and we'll get a classic trading levels pattern at the 5,000 here as well. But our aim really is to get from here up to the 4, 8, or to the 5. We'll have a little bit left. We'll take most of it off here. But depending on what you're trading, futures contracts, CFDs will be fine in the third wave here, because you'll be traveling pretty quickly. You just don't want to get caught up in big corrections with the overnight financing, because it can get a bit expensive. But that's it for that. So I'll just leave it all at that for the S&P. I don't need to talk about too much with the NASDAQ. It's the same, so same, but 1 and 2 and 3 and 4 that we're looking at. Probably need to move the wave 4 over here, but it doesn't really matter. Trade up to the 13,000, maybe a bit higher, whatever, but we'll be seeing some sort of ABC correction over here. I've probably drawn this too big over here, but it doesn't really matter. As it starts to unfold, we'll be checking in on it and doing all the right things at the right time. But once again, a classic trading levels pattern: the arrival, the reaction, the first high above the level, the ABC pattern, and then going long above the B wave. But we want to be building in. We get a few positions here, and then back the wheelbarrow up and start shoveling it in this section over here. Yeah, so that's that, and the same with the with Russell here. So wave 1 and 2, and well, this is a bit slightly different. We've got wave 2 here, and well, yeah, slightly different, but it doesn't matter. So, but here we a bit more definition in this move here. So 1, 2, 3, 4, 5 here to finish off wave 1, and then the ABC, and then we'll be looking to move in over this side again as well. So the stock market, if you have a look at the stock market video today, even though you may not trade stocks, you trade indices, you have to remember that these patterns are coming from there. So to understand, but they're exactly the same. So it's all it's all working really well. So all we could do now is have our fingers crossed for a bull market or a bear market. But I have to say, either way, right? Either way, if we're bullish or bearish, in both cases, they're going to be pretty swift. So that's the good news. So don't get married to either side, and stay with the evidence, tick boxes, and manage that risk, and enjoy the weekend. Cheers.